Welcome, Greek U Nation, to episode number 660 of the Fraternity Foodie Podcast. I'm your host, Dr. Mike Eilon, CEO of Greek University. I'm a speaker and an author. Our ninth book just came out. It's called From Letters to Leaders, The Legacy of Service. So I want you to go and pick up that book on Amazon today. We call these episodes the Fraternity Foodie Podcast because there is nothing like great food to bring college students together. Fun fact, while it might not be the most exciting topic on the planet, this topic that we're going to talk about today absolutely does impact today's listeners in fraternities and sororities much more than you know. It is the field of insurance, and it is one of the reasons why men's fraternities have skyrocketed in terms of cost for liability insurance premiums over the last decade. So we're going to talk more about that. And also, my father was an insurance guy himself. He even had the CPCU certification. So this has been something that has been living inside of my family for generations. And we are going to learn a lot more about the field of insurance on our podcast today. Our next guest is David B. Hampson, an entrepreneur, a pilot, an aviation insurance guru, an award-winning author of a book called Rainbow Gold, and he's the founder of Rainbow Gold Advisors. Let me tell you, David is a sought-after keynote speaker as well, and he brings real-world business experience, humor, and authenticity to every stage. His new book is called Rainbow Gold: Building a Business That's Both the Journey and the Destination, where he, as an entrepreneur, shares his candid story of moving from a science student with no business training to becoming a successful acquisition entrepreneur and aviation insurance leader. Welcome to the show, David.
Yeah, thank you very much, Michael. Great to be on here this afternoon.
Hey, it is an honor and it's a pleasure to have you on the show. We certainly appreciate your time and your expertise. Now, you've made a really, really interesting claim here. Let's start with this claim. You said insurance is the DNA of capitalism. That is very bold. So, what did you mean by that? And why do you think a 20-year-old fraternity or sorority member should actually care about this?
Yes, and I think a lot of people wonder, like, how could that be? But and I can't take total credit for it. That originally came from my dad. He was in insurance. My grandfather was too. It runs deep in the family. But we say it's a DNA of capitalism because just think about all the different things in business and life. Imagine, if there was no insurance, how would doctors practice medicine with the risk of malpractice lawsuits? How would lawyers practice law? How would businesses open, and sell products without the worry that they could get sued from a product liability claim? How could companies manufacture things? All these things that people do, they probably couldn't afford that risk of a lawsuit if there wasn't insurance, if something going wrong, or property loss. Imagine even your home. How would you get a mortgage? Would a bank loan you money if they didn't know that you could rebuild a house after a fire? Of course not. Let alone a business loan. There are so many parts of the economy in business and life that would come to its knees if there wasn't insurance to protect the uncertainties of life and business.
You're absolutely right about that. So now I understand the claim fully. Now, I work in the fraternity and sorority space. Many of our undergraduate members are paying a lot of money in liability insurance premiums, and they are shocked when I tell them there's really only three insurance companies that are even willing to insure fraternities. So why is that? Why are only three companies willing to insure this group?
Well, that's most likely because, there's been companies probably that have been in that space and they lost money and then they exited. That's usually what happens. We see that in a lot of lines that are a little bit more challenging to insure. And the one thing that sometimes a difficult concept to understand is that, most insurance companies, they're not part of a governmental agency by and large. They're a company that exists and they're there to make money. They need to return. They have a fiduciary obligation to return a profit to their shareholders. As much as we don't like to say it's, like to see insurance companies making money, they by and large are for-profit businesses, and many of them are publicly traded. So they have to look to write business that will return them, some degree of profit. And a lot of times people are surprised that an insurance company that operates, with like a 90% loss ratio, meaning that they pay out 90% of what they collect overall on claims is actually really good result. So, they're actually paying out generally most of what they take in. But when they're unprofitable consistently, they'll pull out of a marketplace. And I think that's been the challenge here with fraternity insurance is that I think it's also been difficult for them to set rates predictably because if you look at it, it's a fairly small pool of risks overall. If you look at the number of fraternities in the United States, although it might seem like a big number, it's really small in insurance numbers. In insurance, there's something called the law of large numbers, which means that the more similar exposures you have, the easier it is to predict what you need to charge for a rate. So, like, in auto insurance, that's a great example of where that works. There's 268 million motor vehicles in the United States, and lots of good data to figure out, for this particular make and model, how much do we need to charge and do it accurately. But for something like fraternity insurance, it's very difficult because there's not a huge number. And of course, they're in different regions of the country. There's different size fraternities and sororities, and so it can be challenging. And it's kind of analogous to aviation insurance in that way. Like in aviation, we sometimes have that challenge. That's what I do. And there's very few. There's only 220,000 aircraft in the United States, all types of airplanes, from small Cessnas to big business jets. So similar challenges, and so that's one part of it is just the numbers. Another is the type of exposures that there are. With the fraternity, you've got the risk not only of property loss and like slip and fall type of claims on the premises, but you also have potential liquor liability, assault and battery risk, potentially sexual assault and molestation type charges. There's a lot of extra exposures that you might not find like a traditional business or residential building, for example, that's a little bit more prevalent to look out for in a fraternity.
Yeah, that's really good feedback. I appreciate that. The other thing too is we've seen a tremendous growth in terms of the premiums over the last 5, 10 years. Why are the premiums so high for these undergraduate students? Is it purely the actuarial data that they have, or is there also other cultural factors and cultural influences involved in calculating that number?
I would say it's probably honestly, it's probably a combination of both. Like I think that because of frankly, because there's a limited pool, those carriers that do it probably feel like they can charge what they feel is appropriate to take on that risk, and it's going to be a higher number. Obviously, whenever there's less competition, the rates tend to be higher. That's just typically a fact of insurance. And there might be some cultural bias too. Like it may be that, because of some claims that have happened in the past, I feel like fraternities has gotten much, more, regulated in terms of like what they do, the processes they have, the oversight that there is than there perhaps was in the past. But sometimes, underwriters can get something in their mind that, oh, that's risky, or, that we don't like that type of business, so we need to charge a lot. And it's kind of like ingrained in that cultural sort of bias towards it, even though in reality, a lot of the risks may have been mitigated by how fraternities are operating today, which I think are a lot better than they were in the past. Unfortunately, sometimes that takes time to filter down to the, insurance companies. They're notoriously slow to move on stuff, and of course, there's always a long tail to finding out, what the losses are going to be on a particular risk. So I think that like once, over time, if the loss ratios get better and improve, there may be other companies that say, you know what, there's some money to be made here. So we'll try to compete with the three carriers that are there, and then they try to get some market share, and it puts pressure on the legacy carriers, and rates start going down. That's kind of that's what you want to see that competition. And that sometimes takes time. So there's always the delay there. So I think, that's what it is. It's there. Yes, there's been some bad losses there, but I think there's some cultural bias and part of it.
Yeah. When we talk about claims within the fraternity and sorority market, certainly you see a lot of slips and falls at the house. Typically, the house is aging. So, maybe repairs and things like that need to be made. You have a lot of people falling off the roof. By the way, a lot of fraternity and sorority members get off the roof. If you're not a licensed roofer, you do
Yeah.
not belong on that roof. I can't tell you how many claims I've seen from
Yeah.
people falling off the roof because they think that it's a good idea on a nice day to sit up on the roof and watch students walk by until they fall off. So there's that. But then you're right. And in terms of the big problems within fraternities and sororities, and the big claims, hazing, sexual assault, alcohol, and drugs, right? I mean,
Right.
those are
Yeah.
kind of the big three there. So what do fraternity men, sorority members, what do they misunderstand about liability, about personal exposure and risk?
Yeah, well, yeah, that's a good question, and I think that well, I think a lot of young people don't really think about risk a whole lot. That's the whole concept when you're younger. I mean, we're all, I think, have been guilty at to some degree of like feeling invincible and, nothing's going to happen to me. You're not going to have consequences. I think the biggest thing is that they don't think about what could go happen, what could go wrong, what could happen, and the consequences of that. And, some things insurance will protect you for, but even having a good insurance policy doesn't protect you from everything. And there's different types of risks. Obviously, there's risk of causing bodily injury or to someone or property damage, and those can by and large be insured. Um, but then there's also reputational risk too, and that really can't be insured. And sometimes young people don't realize, especially in this day and age where everything is recorded and everything's posted, that you do something that you regret doing, and even if there's some sort of insurance to cover by and large the outcome of the damage that causes, that could hurt your reputation for years to come. And even there's even that risk too, right? That maybe affects your career later on, and and you have these consequences you didn't even realize. Aside from what could be insured. So that's, you really need to think of all aspects of risk. And when we talk about, risk management, a lot of times we talk about like within a company, but it applies to life too. Enterprise risk management. It's broader than just insurance. It's also looking at all aspects of risk that there are, even beyond stuff that can be insured. And then how do you manage that? And, a lot of it involves, thinking, having a good decision-making tree and a decision-making process before you do something. And even if it's something maybe you want to do at the time, try to think through, what if the worst case happened? What's the worst possible consequence? And can I live with that? Is that acceptable? Is that a tolerable level of risk? And I think if people think through that a bit more carefully, they'll make better decisions and realize some of the things they maybe were thinking of doing the potential risk is more than they really want to have to deal with.
Yeah, I think that's really good. From my perspective, I will tell you that fraternity men typically, if you are willfully violating the policies, and that could be something like, as an example, having a keg at your fraternity house, the actuarial people, they all said that this highly increases the risk, right? If
Yeah,
you're having
right.
kegs at your house. And so, if you are willfully violating the rules, you throw a party with 10, 15, 20 kegs at your house, then you're not going to be covered. So all of that money that you've paid out in premiums is now not going to cover you because you willfully violated the rules. Okay. You are basically saying, I don't care about the rules. I'm throwing it all out and I'm doing things my way. And then what happens? Now suddenly you have personal exposure because now that if somebody got hurt at your house because of the 20 kegs that you were serving, then now suddenly they're going to go after your parents' homeowners insurance. Okay. This is basically kind of what happens in the industry. So you have to follow the rules. And if you're willfully ignoring them, then unfortunately you are not going to be covered and all that money is worthless that you've paid out in premiums. So keep that in mind, please. Now, a lot of the college students now, they're listening and they're thinking about their future jobs. What industry am I going to be working in? And you've also mentioned that there's a generational talent gap in the field of insurance. So what's happening in this industry right now?
Well, yeah, it's a lot of gray hairs in the industry for sure. You can see that when you go to, trade conferences and insurance, for sure. So, especially in the leadership, if you look at owners of insurance agencies or managers, leaders, executives, by and large, it's an older generation. And, it's not a generation where, it's not an industry where the younger generation is embracing and saying, oh, I want to do that. I mean, I don't think it ever has been. But I think even more so today, young people aren't even thinking about it as being a viable career. And I certainly didn't. I mean, I always, joke with my dad that when I was younger, I remember in high school, I worked in his office for one summer. I told him, Dad, I never want to be in insurance. This is so boring. I don't want to do it. And now I love it. So, but it's hard to understand without being in it, what a great business that it is. And we do need a lot of young people because even with the advent of technology and AI, which is becoming a factor in insurance like it is in all industries, there's still a need for good people to enter the industry, particularly people that are going to go into specialized fields and have good technical expertise, because that a lot of that specialized advice can't be replaced with AI. So the great thing about it, to me, it's especially the insurance agency business, like what I do, it's the best business model in the world. And I'll tell you why. One thing is that it's economically resilient. So, through pandemics and recessions and, any type of climate, we just keep going because people always need to have insurance, right? You need to have, like sometimes you can do without life insurance or decide not to get it. But like if property and casualty insurance, like you couldn't have a fraternity, the school would require you to have insurance, I'm sure, the university, or, have a home, a mortgage, you need to have this, you can't do without those policies. So people have to have it to do business or live. And so it's resilient. It's also recurring revenue, like policies renew year after year. So if you do a good job and you take care of clients, they'll keep renewing their policies with you. It's also the sort of business that once you build it up over time, it has tremendous value. Insurance agencies sell for very high multiples these days. I mean, I have private equity companies calling me all the time, trying to offer really large numbers to buy us, much higher multiples than other industries get. I mean, we can sometimes sell for, you know, something like, up to 10 to 15 times EBITDA, EBITDA, which is also another way of measuring profit. So it's great asset value as well. And it's also can be a lot of fun because you can find an area that you like. Like I'm passionate about aviation. So when I'm a pilot, so I went to aviation insurance. But I mean, my sister loves fine arts and jewelry, and she does insurance in that area. She works for a company. And I mean, people that like boats that are really into that can do marine insurance. Or, if you've been in the construction industry, you could do contractors. I mean, find an area that you love, you're passionate about, and you can find a way to get into it with insurance and have a very economically resilient career that, it can be a lot more fun than people actually realize it is.
Mm. You mentioned aviation. I find it to be fascinating because you've actually said that if you move fast and break things, that would get you grounded in the field of aviation. So, talk to us a little bit about that. What does aviation get right about things like accountability and safety that maybe fraternities can learn from?
Yeah, absolutely. That definitely some good lessons there. So, in aviation, it's very much about, you know, following a process and following a checklist, having those processes in place. Before every flight, for example, we have to do a pre-flight checklist and check everything, make sure everything is working properly, make sure we didn't miss anything before we go fly. And that's something the FAA requires, and we do. But then even in the airplane itself, we have equipment that has redundant systems. So if something doesn't work, then there's something else that's going to be a backup. And then we also are always paying attention to, like, while we're flying, what happens if something goes wrong. Always thinking about, okay, if the engine failed now, what am I going to do? Before I take off in my plane actually it's called a Cirrus. It happens, Cirrus SR-22. It happens to have a full airframe parachute, which is a great safety feature. But there's a certain altitude at which that can be deployed safely. So before each takeoff, we think about, okay, the airport is at 500-foot altitude. I know it can be safely deployed at 600 feet. So I know that if I get up to 1,100 feet, at that point, if I have an engine failure, I can deploy the parachute, and that'll be my way to get back down. If it's lower than that, I'm gonna have to land straight ahead. So you think about those things, and, like, even though hopefully, I mean, it's never happened to me, hopefully it never will, but you think through that worst case and how you're going to handle it. And I think that fraternities, if they start to, and some of them probably already have, but they have, contingency plans in place. They have emergency response plans. Like, before we do this, before we have this party, we're going to make sure A, B, C, D, and E is done. That all has to be done to make sure it's going to be a safe event. And, if something goes wrong, this is our emergency response plan. If this happens, this is who we're going to call. This is what we're going to do. And in fact, a lot of the companies I work with in aviation, like some of the charter operators, they will have, like, emergency response tabletop exercises. Well, everyone will sit around a table and they'll act out a scenario. They'll say, okay, pretend that this happened, and someone will come up with some scenario of, like, a crash or something, and they'll walk through, like, oh, we need to call the insurance agent, and we need to, call the police, call the FAA or NTSB, and they'll go through all that, and they'll figure out where the bottlenecks are, maybe, or where someone isn't sure what to do. And it's a very innocent environment, non-threatening environment to figure that out, so that when the real thing happens, hopefully it runs like clockwork. And I'm sure that like a leadership of a fraternity could probably do that as well and walk through like, if this happened, how are we going to handle it and figure that out and then work through the kinks in that before something bad happens and you don't know what to do.
I
Yeah.
think that's absolutely brilliant. That's exactly what I was looking for in that answer. Because, yeah, if we had a pre-party safety checklist that we
Right.
ran through with the chapter leadership before the party even starts to make sure that we have everything in place from a safety perspective. And then I love that role playing that you're doing. I think it's fantastic. Let's do that as a chapter before the party even happens next week. Let's not wait for it to happen to start figuring out what are we going to do. Let's just talk about it in advance as brothers and say, okay, we have a member of a sorority who shows up at our house and is completely inebriated before she even walks in the door. What are we going to do? Right? Let's
Right.
just
Exactly.
let's just role play that. Like what how does
Yeah.
that play out? You know?
Yeah. That would be great. I think, fraternities start doing that, they'll be able to respond to those situations so much better.
Yeah. When it happens, they're going to be like, all right, we talked about this last
Yeah.
week. I know
Exactly.
exactly what to do now. But
Right.
let's not wait until that happens in order for us to figure out what to do. That's the
Right.
whole point,
Exactly.
right?
Because then, yeah, when that happened, when you haven't practiced it, then the adrenaline takes over, and that makes things even worse because you get nervous, you don't know what to do. Yeah.
100%. I think that's brilliant. That's really, really good. Now, in your book, it's called Rainbow Gold. You talk about building a business that's both the journey and also the destination. So, what does that mean for all of these college students who are choosing careers right now?
Well, my advice on that would be, don't just think about, how much money you can make, especially in your first job, because, you're in the best position right after school to maybe take something that might not be as much as you would like, but, long term, that's going to get you to where you want to be. And, it's easy to chase after the dollars, but, think about when you enter your first career, think about you're going to be working, 8 hours a day, 5 days a week, most likely at least. And that's a lot of time you're spending of your life. And, obviously you have a long runway ahead of you right after school, but it's a very limited time we all have. And you want to enjoy what you do. And part of it is being financially successful. I mean, that can be an important part of it for many people. It is for me and my business, but also it's also equally important that I'm getting personal satisfaction out of what I'm doing and personal fulfillment. And that will make you so much happier in your whole life if you achieve that. And that's why you want to find something that can give you that as well while you're doing it. Like sometimes people go in a career and they absolutely hate it. They're miserable. It's like they're in a prison, but they're like, oh, I just need to get to this point 10 years from now or 15 years from now, and then I'll be all set. Well, that's a long time to really be suffering, to put yourself in a personal prison to get there. And I don't think that's the best way to get to success and personal happiness and self actualization if you want to achieve that. So really think through that. And, it's okay if you're not making the highest amount right away. And I almost guarantee you, if you find something that you're personally fulfilled with and satisfied with and makes you happy, that will definitely more than offset the maximum amount of money you can get every time.
Yeah, I totally agree. That fulfillment piece is really, really important. I actually have a degree in accounting, and I was a staff accountant in New York City in a cubicle doing debits and credits all day long with no windows.
Oh,
And
gee.
I was like, get me out of here. There was zero fulfillment. Yes, my bank account was very happy, and I will
Yeah,
always have a job because I have that
yeah,
background.
yeah,
However, there is something about happiness and fulfillment that if you really truly want to reach the pinnacle of whatever it is you're doing in life, you have to be fulfilled. You have to be really enjoying the work that you're doing. And that's the only way to reach the pinnacle. If you're miserable all day long, I promise you, you will never get to where you want to go. Okay. It's just not going to happen. So I think that fulfillment piece is certainly something that our students need to think about. And don't just chase the dollars. David is absolutely right. You have a long life ahead of you. Really look for the experience that you're going to need in order to get to where you want to go. All right, all of this is really good. Now, also, you talked a little bit about burnout among high achievers, and all of our fraternity and sorority leaders, I would agree that they're all high achievers in life. So, what warning signs should we be looking for in college students in their 20s that burnout is starting to happen?
yeah. So I think that obviously we're starting to feel like you're depressed, like you don't have a balance in your life, you start to, if you start to miss important personal things in your life that you can't, you see that like there's a birthday party or a family event, you can't make it, you're missing it all the time, you're having trouble keeping to your schedule, and you feel like and internally you're feeling like there's so many, people pulling on you at one time, you're being pulled in different directions. That's a definitely a sign you're starting to do too much, you're getting burned out. Also, you get this sense that you need to find an exit, you need to find a way out. That's another sign too. Like you want your situation to be over, and in sense of like where you are and what you're doing. You're looking for the light at the end of the tunnel. Those are all signs you're getting burned out. And that a lot of time high achievers, and I know I've been guilty of this, you don't delegate enough. And I mentioned that because you talked about the leadership of the fraternity. A lot of times, as a leader, you mistake being a good leader with doing everything yourself. And that's something I've learned over my career, that, being a good leader means finding good people and putting the systems in place so everything runs smoothly. It's not just being a workhorse and doing it all yourself and piling on yourself, because that's a great way to get burned out. So someone that doesn't delegate well and as a leader is probably going to get burned out.
I think that's a great point that you make. I think, when I was in college, I just thought that if I gave it to somebody else to do, that they were going to screw it up. That was what my thinking
Yeah.
was. And so I had to do everything myself to make sure that it got done right. But then I got burnt out.
Yeah.
So really, it's important that you learn to delegate in college while you have this fraternity and sorority. I think it's good for your own mental health to be able to delegate, but it's also a really important skill if you want to build a big business like David is talking about. You have to depend on other people. You have to depend on systems in order to build a $25 million company. Okay. You're not going to be able to do everything yourself. So it's really important that you learn that skill of delegation, and then it trains the next generation so that way they're capable when you move on. Don't you want this company or this organization that you work so hard on to continue to grow after you're gone? Of course you do. Of course you do. But that means you have to train the next generation. You can't take all of that institutional knowledge that's in your head and graduate and then leave and then let this organization flounder after you leave, right? So that it's really, really important that you're able to delegate that elsewhere. Now, you've also worked with a lot of young professionals. What are some of the financial mistakes that you see young professionals making, let's say, in their first 5 years out of college?
Yeah, so a lot of times when particularly people, that graduate from college, and they can typically get a fairly nice income, more than they've ever made before when they're working summer jobs or whatnot, and that initial bump in income can be really exciting, and they don't have a lot of responsibilities yet, family wise, financially, so it can be easy to get that lifestyle creep really fast, and you end up spending too much on the wrong things. You think, I don't need to worry about investing at all, and you get into, particularly if you end up getting into long-term commitments. By that I mean like buying a really expensive car, we have a huge monthly payment on your car, or something else you buy that's not necessarily an investment generating any sort of asset for you, but you get stuck into a large monthly commitment. Before you know it, those pile on top of each other. And then even if you're doing fairly well financially with your job, you're stressed out because you're having trouble making ends meet, kind of almost get to the paycheck to paycheck. And I've seen that happen with people that have made six figures before, and they're still paycheck to paycheck because they're loaded on too much commitments. And there's a big difference between good debt and bad debt. I talk about that a lot in my book too, that debt's a beautiful thing. Like, and for business, it can be a money tree, and it can help you generate an asset and build something much quicker better than you ever could if you try to save up yourself. But bad debt, the things I'm talking about, like credit card debt, expensive cars, boats, toys, motorcycles, that's the stuff that gets you in trouble, and that's a financial mistake. And so many people that I know that are also older, most people think if I could go back into my 20s and start my 401k then, and start a retirement account then, or buy life insurance then, like I would do it in a heartbeat, because the compounding effect of that from when you're in your 20s is huge. So just try to at least find something you can invest in. Even if it's a small amount initially, like start thinking about the future now, because you'll thank yourself when you're 60 years old, and that's really compounded. So people don't don't think about that in their 20s at all, and they wish they did when they get older.
100%. Invest in that 401k. Forget about the car, that brand new car. I'm telling you, that's a depreciating asset. Soon as you drive that car off the lot, a quarter of its value just evaporated the moment you drove off the lot. Okay.
Yeah.
It's gone. And so if I could go back, that's what I would do. I remember graduating and I had to have a brand new white Mustang in the driveway because I thought that I had earned it because I had graduated from college. So now this is what we do is lock ourselves into a high payment for 5 years. Terrible mistake. I should have just bought a jalopy that got me from place to place. Nobody even cares what car you drive, okay? I'm just telling you the truth. I'm telling you what I've learned. Nobody cares. Okay. It's a
It's true.
depreciating asset. Oh, yeah, yeah. I'm telling you the lessons that I've learned. Now, the other thing that's great about your business, David, is that you actually maintain a 97% client retention rate, which is absolutely incredible for any business. What does that say about the way that you lead your business?
Well, it shows that, we have some really good people, and as I've been a good leader by identifying good people to work for us and in developing them, and also not only having a good retention ratio of our clients, but having a really good employee retention ratio. We have some people that have been in our firm for a very long time. We have low turnover, and I need to have really good people. I can't do everything myself in order to have them take and people that are happy working for us, and in order to have them take good care of our clients. So that's part of it. And the other part of it is that we try to not just be uh order takers. We just like give people a quote and all right, here's the cheapest price. We try to give them advice and advisory services around that as well. Like we'll talk about risk management, like some of the stuff we talked about earlier here. We'll talk about you know strategic things with if it's a business, for example. We'll talk about contractual stuff, ways for them to transfer risk contractually with some of their contracts. We'll do a lot of stuff around the insurance policy so that when someone else calls them and says, "Hey, I can save you 15%," they say, "No, I'm all set," because they think of the whole host of other things we give them outside of actually the insurance policy that are value added services. So, in a business, if you can find a way to give your clients a lot of value added professional services, you won't be seen as a commodity and they'll stay with you.
There you go. Give your clients value. I love what you're doing. I think it's great. Now, I'm sure our listeners have a whole bunch of questions for you. First off, they want to buy your book. The book is called Rainbow Gold. Perhaps they want to connect with you for speaking services. Maybe they have an insurance question and they have no idea who to go to. So, in order to do all of these things, buy your book, get you to speak, and maybe they've got some insurance questions. Where should they go to connect with you?
Yes, thank you. So it's my website is www.myrainbowgold.com. And my email address, the best email for me is it's easy. It's David at Plane Insurance, Plane insurance.com.
Planeinsurance.com. Look at you with that like styling URL. Now I know why all these companies want to get your company in their hands because you've got that incredible URL that does
Yeah,
very well in the search engines, right?
indeed. Yes, it's a good one.
See, I know a thing or two
Yeah.
about the World Wide Web, and
Yeah.
I've traded a lot of URLs over the days, and that one would be a valuable one. So well done, David. You
Yeah,
built an
thanks.
incredible business. Congratulations on all the success, and thank you for sharing all of this information with our listeners.
Are you welcome, Michael? I enjoyed being on the show. Thank you so much.
You got it. And to our listeners, if you learned something about insurance today, I want you to share this episode with your chapter. Put the link in a group chat, put the link on social media and share it there. You never know who needs to hear David's message about insurance today. Thanks so much for joining us, and we'll see you on the next episode of the Fraternity Foodie Podcast. Bye for now.